Very pleased to report a very strong growth in earnings, with group operating profit almost doubling for the year, and group headline earnings per share growing by circa 2/3 to R3.35 per share. Really driven substantially by a very good performance from our investments and concessions cluster, where we've seen a very robust operating performance across all of our projects in Poland as well as Hungary, and a very good startup of our new project in Northern Ireland. And very strong profit growth in the value of our investments within Eastern Europe. These are investments we've made in the underlying concession companies, both in Poland and in Hungary. So really that performance driven by concessions. Equally well, a very strong profit performance by the group, maintaining group cash levels, total cash balances at circa 3.3 billion rand, similar to last year. So a very strong cash performance across the group. The engineering construction cluster delivered a better result at an operating level compared to F 2015, delivering 128 million rand earnings, and that was, however, prior to a significant provision we had to make against a problematic debtor of 365 million, which did put the E&C cluster into a loss-making position. But prior to that, certainly the trend is in the right direction for E&C. And then finally, manufacturing, in a very difficult local manufacturing environment, did well to be able to maintain earnings within margin guidance, albeit at the lower end of our guidance at a 6% margin for the year. Really, I was talking about the order book decline. So the pace of order book decline that we've seen, that slowed to a 5% reduction over the last 6 months. So certainly the reduction in order book previously had been more significant, and we have seen some recovery in some of the domestic tendering market, as well as some improvement in the commodity cycle resource-driven markets in Africa, where we are bidding now some new mining work, as well as work still within the gold sector. And then in the very difficult civils market, we have seen some recent contract wins, which gives us a little bit more optimism that that negative momentum is at least slowed, that we won't be seeing such a significant ongoing decline in total value of work being tendered in our markets. We see a lot of opportunity in line with our sector-driven strategy across Africa. So we're pursuing the high growth markets of power, the resources sector, the transport sector across Africa, where we are working with international financial and technology partners to deliver solutions for these kind of assets, power plants and roads and airports in the continent. And that's where we see an opportunity for growth, both top line and bottom line for the group, given the low growth environment in South Africa. Kpone continues to perform in line with plan. Kpone remains on track to be completed in the F 2018 financial year. So far, overall, we're very comfortable with the performance on that contract. There have been some positive developments, and of course there are also some challenges you need to deal with. That's a reality when you're dealing with a very large multidisciplinary contract in difficult markets logistically elsewhere in Africa. Thus, we are very pleased how the team is working very hard to ensure we're delivering on our commitments on that contract.